what is the next big thing and how are things going to work in the future in the financial and investment worlds. Now, this is our first episode, our inaugural episode, and we're absolutely thrilled to have a very special guest today on our show, and that guest is going to be Markus Lehner of LEHNER INVESTMENTS. He's the principal there and also a technological visionary. He founded LEHNER INVESTMENTS in the early 90s, and he has since then continuously built on believing in technology, and he has transformed the sector in his own way. And we're going to talk to him today about how he has done that, why he has done that, and what I can also tell you is that we have not only him, but also his head of research, R&D, on the show, Dr. Konrad Wölms, and we will also talk to Konrad about how this is actually done and have a little bit of a glimpse behind the curtains on the shop floor on how AI-powered investing actually works. So very excited about this episode, our first episode today, and let's get started.
As you're talking about the data, so we have so much data that can't be processed by a human in a reasonable amount of time. What are the results that you're seeing from using this technology?
Very good question. Well, I mean, we have to divide here the subject of results, because for us, when we started to implement AI in the asset management, especially in regulated products, in products which are like UCITS funds, then the first thing we always look at is the technical side. And the second thing is, of course, the performance side, since we're an investment company. But the technical side was a big challenge to implement that, because we are really doing everything from research to execution based on AI, based on technologies. And when we launched our first fully regulated investment fund, it didn't actually take us too long to get the technology right and get the technology working well. And today, several years later, there's really flawless working. And I'm very happy, because I was expecting actually that there would be much more technical issues to implement AI in the asset management space. But this really worked rather fast, rather well. And we have to say, after a few years, really flawless now. Now, the second side, of course, as mentioned before, is always the asset management side. And on the asset management side, we had at the beginning some difficulties, to be honest. We had to learn how the machine would learn, how the information would be provided. I mean, you have to understand, we are reading, well, our computers, our machines are reading more than 2.5 million news a day. That's quite a lot. We had to understand how that works best. And I have to say that today we can really say that computers can do things better than human beings also in this field, because what is a big advantage of what we're doing is basically that our results get automatically by itself better and better every day. If I may explain that a bit more in detail, we have 4 points which improve all the time without doing much and going together. For example, the information you get on the internet, the information you get to make an investment decision are getting better and more comprehensive and more precise every time, because there's much more information out there without being able to stop that. So this is one very important factor for us to have a better base to make better performance. The second thing is, of course, technologies. I mean, everybody knows everything goes more digital, computers get faster, the internet connection gets faster. So the second point is also improving without doing much from our side. The third thing, of course, our team is improving. We were growing as well from the times I've described before, when we were just a handful of people. Now we're a bit more than 30 people. And I would say we have 5-6 people who are really the core people in the AI space, in the algorithm space. And as a fourth point, and of course, last but not least, the artificial intelligence is something which is learning by itself all the time. And if you put these 4 factors together, it's logic that the results get better and better. And it shows a lot on for example, on our German equity fund. We have a fund which is long only pure play artificial intelligence managed, as said before, from research to execution. And if you look at the performance, you see that it's getting better and better. We are beating the index, the DAX, the German equity index, recently all the time. And I said, getting better and better all the time. And that's exactly the point I had in mind 10 years ago when I said, machines can do things better and faster and advance much faster than humans could be.
AI and big data is used everywhere these days. It's, one sees it everywhere in, let's say, in the medical field. It's used to detect skin cancer. It's used to design airplane wings. But you don't really hear a lot of talk about using AI for investment. So I'm wondering, Markus, what convinced you to go into that direction? What made it come up for you? And how did you get into AI for investment?
The first thing I have to say is not yet. You don't hear much about AI yet in the investment industry because other industries are more prominent and have more media power, so to speak. But to answer your question, what brought me to this idea is that I just simply thought in the old classical, I don't want to say dusty, but classical investment world, we never used any technologies. I'm doing this investment fund business or the investment world as such since over 30 years now. I did not do anything in my professional life till now, and I don't intend to change that anytime soon. So this is my world. But beside this, I always loved technologies. I used to be a racing driver. I'm still a pilot today, even a jet pilot, I dare to say. So I like technologies. And in these fields, I have seen next to my profession that technologies can help a lot. And I started not 10 years ago, I would say a bit less than 10 years ago, to look a little bit what's going on in our business, what we can do, how we can improve basically the investment management side, the investment decision side, with the help of technologies, with the help of artificial intelligence. And there were the first few blossoms coming out of ideas and companies trying things to do. And to make a long story short, I teamed up with a team in Frankfurt at the time, which were already at the time very much advanced in this field. And I think we developed something very, very, very interesting concerning AI in the asset management space.
Fantastic. And I'm wondering, just to follow up on this a little bit. So when you say like why you did it, so you're saying you have this sort of technological background, you're fascinated with technology, but you see also that there are certain things that machines can just do better than people, right? And is that kind of where you're coming from? I mean, if you fly in an airplane, well, you can fly because there's a machine, right? We have this conversation. You're in Monaco, your colleagues in Frankfurt, we're sitting in Geneva, and we're kind of taking this for granted. But this is stuff that's powered by technology. So is that a little bit the belief or where you're coming from?
Exactly, that's exactly where I'm coming from. But first of all, I think you see things with different eyes when you have a certain, I don't want to say love, but a certain affinity for things, right? And since I had this love, this affinity for technologies, I understood very fast. I think that technologies would help a lot, and not even to speak about aircraft, because I think everybody can imagine that in aircraft technologies help a lot, but simply cars we're using every day. Think about the ABS braking system, right? I mean, can you imagine that as a human being without technologies, without the computer in the car, you could brake four wheels independently, depending if a wheel is blocking or not? You need to have already 4 feet to do that and 4 paddles. So it's already very difficult to do that. And for us, it's everyday's use. If there's a situation we want to brake a bit harder, we just hit the pedal and the computer is regulating which wheel is braking, which wheel is not braking. And these are everyday life things which we just have, and face recognition on the iPhone. And I mean, there are 1,000 examples. And I just try to understand why we don't have this in the asset management space yet, because there's so much data out there, especially when you come later on to digital assets, but also for the conventional classical investments. There's so much data out there, and it's almost impossible for a human being or for even a team of researchers and analysts to get all this knowledge together in a short period of time. So processing speed is something that computers are by far ahead of human beings.
Fascinating. And I love the fact that you're also, essentially, you have this built-in betting on mega trends, right? Like you're saying, the technology is getting better, the data is getting better, your team is more experienced. And of course, we're also the actual technology, artificial intelligence or machine learning, it is a self-improving system, right? And I think at this point, I would love to hear some if you don't mind, we take a little peek behind the scenes and actually talk to your Chief of R&D, Konrad. Can you give us some idea of how this actually works? And when we took peek under the hood of that engine.
I'll gladly do that. And I actually also brought a few modified slides for us that actually, first of all, take a little bit a step back to really get an idea of how AI and machine learning and all this that we're using really works, so we can then, after we make sure we have like a general understanding, get really into any detail that we like. Yeah, that's the first slide, and it's really super high level of how the machine learning works and how really everybody who does AI and machine learning does this sort of thing. But it's important to understand to really where this technology comes from and what concepts it really always has in common, and then to look at what's really special about what we're doing, what's special about asset management and all this. And just to be clear on this, so I'm actually talking about a subset of what falls under machine learning AI, which is called supervised learning. So that's why it's written there. But it's really a very big part of the whole game. So it makes a lot of sense to talk about it and use it. In very rough terms, we really subdivide the process of using machine learning for anything in real life into two stages. One is the research or training stages, where our researchers sit and actually do stuff. And one is then actually using this in production, which for us means making investment decisions. And here, really, the main point I want to highlight here really is for this type of learning, how does this really work, is that in the research stage, what these models, these algorithms, what they do, or what happens is that they get input that they want to use to predict, but they also get sort of the ideal predictions that they should make. So if we take an example for image recognition, we say, if you give the algorithm a picture of a cat, you tell it this is a cat. So cat is the ideal prediction, as opposed to dog, for instance. So that's really this research and training stage. And then when you actually use it, the only change is really, you then do not give it predictions from the beginning, but you really just give it the input and then expect it to tell you, okay, what comes out. So is this picture a cat or dog, or in our case, is this a good investment decision, or is this not a good investment decision? And that's really the fundamental difference between these two stages. Both stages are technology driven. So if you look on the right side, this is still a digitalized pipeline that then runs the fund and the process. But the actual sort of machine learning specific stuff happened before in the research and the training stage. And the connection between the two is really the researchers do research, and it iteratively improves, and then at some point goes over here, and also once in a while or on a regular basis gets updated, as was already. These systems also, which is really a little bit this back and forth.
Let me just look at this for our viewers, just kind of repeat this back to you. So basically you have two stages. You have the research and training stage, where you actually train the model itself by this process called supervised learning, essentially, and then you take it to the production side and then apply that algorithm that has been trained, and then it starts to actually give you those signals for the investment purpose. How do you then sort of like feedback? Do you also feed back into the system by from the results that you're getting in the production side, and then that gets fed back also to the to sort of the training side, or no?
Yes. So that is in our setting, that actually quite naturally happens, because in investment decision making, what we train on or what we use is, of course, historical data, historical price movements, and all that. And as new trades are made live on the market, they automatically become the history. So when we rerun the training, or when the training picks up a few weeks later on, it automatically has more examples to learn from, simply because time goes on. So that's here. It's a very natural process, as opposed to other domains where people would actually, let's say, have to go out and take their phone out and make more pictures of cats and dogs.
Yeah,
right.
Which everyone loves, of course.
Yeah.
What is the ratio between human intervention and the machines in this scenario?
So here, the goal most definitely is that there should really not be any intervention. So the idea is that when the model is trained well, we just trust the output of the model and implement its decisions. So for this to work, I mean, of course, we have to create a lot of trust in the model, and we'll make sure that it does a sensible thing. And the other thing we have to ensure is that, as I said, like this learns from examples, and we have to believe that whatever is currently happening can be predicted by examples that the model has seen, more or less. I mean, of course, nothing is exactly the same, but if some crazy events happen in the world where nobody would have predicted it, then we would probably be right to assume that the model might have difficulty dealing with them if they really directly affect the input. So what this means is if there's let's say an election in a sense, and then like right on election night, and there's an event like somebody won, somebody else didn't win, and it was very unexpected. Maybe this direct event is very hard for the model to predict because it didn't exactly know, or doesn't know so many elections on this. But then continuing afterwards, sort of the more longer term impact, you would say disinformation then diffuses into general markets and all that, and actually is picked up again regularly by the model. So that's the way we think about it. So really try not to touch it, not to intervene unless something really bad or really unexpected happens. And we also see that, okay, maybe the model got into the wrong kind of processing unit and it doesn't know it. One example would have been, for instance, also the Corona crash, where one should have, or we did reflect, okay, what are the models doing? Are they really able to predict this very rare event well? But back at the time, so there we were, of course, in the lucky situation that the models did predict that the markets are going to go down. So then we felt confident. But that would have been, I would say, the kind of extreme situation where we would have needed to reflect very carefully if we would have doubted the model. Like, can it really be reasonably learned from examples that had in the past, because it didn't have pandemics in the past?
So in that way, do you feel like you're able to manage the risk, or how does that work in terms of risk management?
So really, it goes together with the question of where do humans even fit into the whole thing? And on one side is, of course, intervention. The other side is this, okay, how do we make sure that this is really doing what we want, and what do our people actually do when they do the research? Because if we trust them that they do their research very well and that it leads to what we want, then also we don't feel the need to intervene. So this is really a focus on what was previously the left side. So we again have the algorithm a little zoomed in. So with some steps, we have the input coming in, we have the predictions coming in, and internally the way the algorithm works is that it really processes the input, gets a prediction, it compares the prediction it made initially just by guessing, if it really started from scratch, compares it to what it should have ideally gotten, and then iterates above this and again to get better and better in predictions. So that's how these things internally work, and how you get them. If you really get one of these modern machine learning algorithms, they do this by themselves, more or less, so you don't have to do so much. The question is, where do really our researchers come in, and what do we do? And that's very interesting also on this asset management side, because what we provide here is the steps before where we made like these errors with LEHNER investments. So we provide what's called like feature engineering, so saying like, okay, how is actually sensible input looking for these investment decisions? And this can be something more classical like price movements, but it can also be these other things that we mentioned, which is text messages saying, okay, we actually think that the sentiment of people matter. When it's about sentiment, and it's mostly, I mean, especially for international stuff, it's mostly Twitter, and I mean, these days also like Telegram and all the Reddit, these things where people post a lot. So these would also enter then as feature engineering, and feel like, okay, this these are sensible features. But the other very important part, and I really want to emphasize this, it's what's called labeling here, which is the process that leads to these ideal predictions. So what we ideally want to predict. So labeling, the name comes from really this traditional process of labeling pictures. So somebody had to, take the picture of a cat and write, this is a cat, such that the algorithm knows. And in that case, it's very straightforward. But if we take investment decisions, saying what is a good investment decision, that's a much tougher question, actually. And really, this is something that the researchers have to model for the algorithms, for the AIs to start learning. And it may depend on really several aspects. So let's say it depends on the investment horizon. If you have a long investment horizon, then something that generally has an uptrend might be a good investment decision. But if you have a look at a shorter investment horizon and something that's maybe too volatile and therefore has a drawdown in between, it's not a good investment decision.
I think that's very insightful because, of course, the question, what is a good investment decision, is actually quite it's not a trivial question. And it, like you said, depends on many different factors. And I feel like that's also where somehow the human elements of the investment philosophy kind of informs the model, right? Because that's when you start. That's where you bring this in, right? That's where you bring the investment strategy and the vision and all of that into the model, right?
Absolutely, yeah. This is where it enters. This is where the human factor is, and this is where it fails if the human factor is not modeling this good investment decision very well. So if the labels are not good, then the AI models, which these days are pretty good, they'll learn to very accurately make poor decisions, and that's not helpful for anybody.
I have a question. So we talked about obviously we talked sort of about the input that, what constitutes a good investment decision, right? And I'm imagining, Markus, that's where you come in as sort of, giving that advice, that guidance. Is that right?
Absolutely. Well, we had the idea, and Konrad explained it very well, but I'm not sure if you hear it the first time, if it's really understandable to everybody, because it was already really going very much into a deep dive and technologies, and I've discussed it, and we have heard it and spoken about it many times. So that's why I would like to maybe say it with my own words. What we're basically doing is we are trying to train our algorithm, our computer, to understand a market sentiment. Even simpler said is, if the world is saying Adidas is a good investment, we believe the share price would go up. If the world is saying Adidas is a bad investment, then the share price would be going down. And we're training the computers to get this sentiment as strong, as intense as possible. We don't, and I think this is a very important point, we don't care at all about fundamental data of a company. We don't look at fundamental data. We don't do any trend following or chart following. What we are doing is we try to get the sentiment on the market for a certain underlying investment. That could be an equity in Germany, in Europe, could be in the future and will be in the future also digital assets. But we're trying to understand the sentiment of the market. And that's why Konrad mentioned it very nicely. When there was this Corona crisis and all the markets went down 30-40% DAX, and so we didn't lose anything, or at least not very much. I mean, there were certain periods we didn't lose anything because the sentiment before that was so strong. Everybody was so afraid of the markets that our algorithm and our system went out. So basically what we're doing is feeling the market, our computers feeling the market, and based on that, we make an investment decision.
Wonderful. Yeah, I think that was a very well described sort of big picture analysis of what you're doing, and I find it's very fascinating. And I think also the insistence that you're not using any fundamental data, any charts, any of that sort of classic instruments for making those decisions, I find really, really fascinating. So you're a purist in that sense.
Another advantage on that or of that is also that because we're not taking any fundamentals, we have a very low correlation to all other asset classes, and many times, as just mentioned, also to the classical stock investors who are based on fundamentals. So we have a very nice chart, maybe we can show it, showing the correlation between our investment strategy, our algorithm, what we are doing, to all the other asset classes. And this is, I think, for a portfolio, an unbelievable big asset.
What advice, Markus, would you give to a startup that's just beginning to work with AI? Maybe somebody in our audience is thinking about how to utilize this technology. What is the advice that you would give to someone starting out
in the financial
space?
Yeah.
Yeah.
The advice I would give to somebody starting that up wouldn't be so different from any other businesses. I mean, if you want to start something up, first of all, you have to have a passion for it. Otherwise, you go nowhere. So wherever you go with your heart. Secondly, you really have to be ready and dedicated to go over hurdles, because there's no business which starts from the beginning flawless. So really, if you want to start, believe in it, do it, and continue. And especially when it comes down to a business which is technology driven, you need to have the right people on board, because business, as said, is an economic side. But if you are in the technology business, you need both. You need somebody who takes care about the business as such, the economics, the marketing, the sales, the structuring, but you need also the technical business people, because you cannot be all in one person. So I used to be very lucky in my life because of my racing past I mentioned before, and spent relatively much time with a 7-time world champion called Michael Schumacher. And he told me something which I really would like to add on this stage. He said, Markus, nobody wins alone.
So this wraps up our first episode. I hope you learned something. We certainly learned a lot, and I think it's always a good sign if you have more questions, then can we actually answer it? So this conversation will continue. We know already that we're going to have Markus back on the show talking about crypto. That's going to be another episode. But we also have, just to tease a little bit, we also have episodes on art, investing in art, and of course more crypto coming up for you.
Thank you so much for joining us.